Good afternoon. This is Canada Tortoise Capital with a review of the weekend trading report for July 8th, 2018. Market is in bullish normal conditions. On an annual basis, using NDX 260, we are at the higher end of neutral at 76. On a short-term basis, using NDX 10, we're overbought at 94 out of 100. Price relative to the 200-day moving average is yellow bullish at 3.10%. The slope of the 50 is weak at 0.30, which is red neutral. ADX 14 has strengthened to 22.3, a neutral level of strength, but it has been pointing upwards, slowly getting better. We'll see that in the risk Z, which has entered the spring down here. The risk index is the 30-period moving average of the VIX compared to divided by the 10. 1.0 is the boundary between risk on and risk off. The current reading is at 0.891, so we are still in risk off. The Z-score is taking that score of 0.891, comparing to the last 5,000 trading days, finding the average and standard deviation, and computing risk Z, which is at minus 1.31. So we are 1.31 standard deviations below the long-term average on that reading. You see here the 90-day histogram of that indicator. We have just turned the corner from the winter into the spring, and so we can look at tentatively adding swing trade positions. This is the sweet spot for swing trading, and so this may be developing again after an excursion down to minus 1.5. In blended monthly rebalancing, the next reevaluation is due on or about 1 August. These are the holdings for the month of July. It says June, that should read July, pardon me. All U.S. These are the current leaders as of Friday's closing prices for different trade populations. In ETF2, the theoretical exposure remains at 40%. Here's some quick looks at blended monthly rebalancing portfolios. Again, you'd see the dominance of the U.S. compared to the globals, which are all below their 4-month moving average. Tech and small caps being favored right now. ETF 32, the same thing, about equally split between buys and cash. Again, it's generally the U.S. sectors and the globals. In the Dow 30, about 2/3 are in a cash signal. You can see the leaders in the clubhouse here. I'd be looking for Merck and Microsoft to continue to outperform, possibly some Intel. Again, so you're seeing some pharmaceuticals, healthcare, and tech reflected in the leaders. In the sector spiders, biotech and software, oil and gas, healthcare. Some negative numbers down here in the financials, industrials. ETF Max, this is the 500 element database, and the key and the leaders there. Some oil seems to have had a really nice run that is, maybe basing right here. Small caps continue to do well. In market health check, the vertical blue lines are 10, 20, 30, 40, and 50 days worth of look back. The horizontal red lines are support levels that were once resistance. This large one here is formed by that bend in the dragon right here, from the hump of the dragon to the belly, and that seemed to hold this last time. The smaller one gave up a little bit, but it held on. Now we have the RL10 crossing the baby dragon, now crossing the mama dragon. This looks to me to be favorable for the long term, for a run back up to 279 for the long-term fair value, and then above that to the all-time high up here around 284. So that would not be surprising. See, the RL10 has tipped positive. The 30 has pretty much come back to flat. And you can see that we dipped below the zero line here. This is This was an endangerment of the previous strong move, but it held here. And now you're looking at the MACD signal line getting ready to cross its 5-period moving average. This is a favorable location here. The last time it did that, it had a nice move from 255 to 270. And so with a low, a higher low, and a higher low, this looks to be favorable. And the fact that it closed well on Friday and broke the PSAR, so we get one dot on the PSAR here, I will be rewarding momentum and follow through. Failure here gets us back to the middle of the dragon and the support level at the belly of the dragon. And if that breaks, it's down into the resistance and support region. I'm sorry, the support region down here. And if that breaks at 264, look out below. ETF regional report, 4 out of 10 are on buy signals, so we're 40-60, no change. The S&P at 62 is better than EFA at 43. Inside the U.S., it's small caps, then tech, then mid caps, then large. Inside the U.S. sector spiders, energy, technology, and consumer discretionary are leading the way. The U.S. is in better shape generally than the rest of the world. The Dow is starting to lag a little bit, but it's all small caps and then all the tech. Latin America, emerging markets, Brazil, all suffering, less Canada. Asia generally worse off than Europe, but Europe's not in much better shape. ETF top 30. Here's our key down here for types of strategies. I leave it to you for your detailed reading, but biotech grabs my attention with the green and white. And then real strength has been here in the energy sector, but again, I think that may be done, as oil can't continue to climb the way it has without some pause. ETF liquidity based on the average daily dollar volume of the last 30 days. Shifting to the daily, we've already seen these. Short side opportunities. If there's weakness in Latin America and in Europe, then that's the place to target to the downside. You can see the usual suspects under the max pains. Again, if we have weakness in the market, those are the ones that I look at for getting short opportunities. Mixed bag here in the Dow. Tactical, lots of frog quality numbers on the declining volatility we've had lately. That makes frog numbers go up. Green symbols are the ones that had outperformance on Friday. Red symbols are the ones that lagged. You can see Caterpillar is a 2.5 to 1 in the auto framer, was a percent loser on Friday, has been underperforming the rest of the Dow over almost every measured time frame. And has been very volatile. So a nice looking intraday trade candidate. Nike, on the other hand, has a favorable reward to risk. It was a doji on Friday, very liquid at 2.6 and volatile intraday, and has been turning in exceptional performances over all the look-back periods. A tale of two different symbols. Inside the ETF 30, just a handful test out well on the auto framer. Brazil had a one-day bump. You can see how bad that has been. But it had a one-day nice pop. Let's see if that's a dead cat bounce or an opportunity to start getting long on a recovering sector. Pinch and stretch. Just a couple super pinch candidates here. Meanwhile, the most positive Z stretches. Mexico, utilities, real estate, Verizon. Verizon had been in that super pinch stack last week, and it started to move north. The most negative Z-score stretches, These are the ones that furthest below their Bollinger Band mean on a daily basis. The most expanded pinch boxes, these are the ones that have had the largest directional moves over the last 30 days and have created a very wide river. And so they may either be at the end of a long run, let's hope that's the case for Caterpillar, in which case you might see a reversion back to the Bollinger Band mean, or the next leg of a momentum move. So these are all have already placed larger than normal directional moves over the last 30 days. And then these are the most compressed pinch boxes. These are the ones that where the river is very narrow. And you get that by having abnormally small-sized moves over the last 30 days, and so potentially poised for breakouts here. Technology UTX would therefore be something of great interest to us. So this UTX is that one of those super pinches. So we can see the 90, the 10, the 30, the 270, all within this tight compression. You can see the pinch of the Bollinger Bands is abnormal compared to the look-back period. The last time it was in that kind of condition here, we caught the Z2 breakout and made a really nice trade on that one. So when you get the confluence of Bollinger Band pinches and agreement on current value of prices, not unusual to see that kind of a follow-through. With the MACD histogram ticking up, the potential for the upside move is of interest to us here. So that's how we might use that. Pfizer just voted to the upside. Let's get long that one here. And we'll be looking for prices up in this area. 38.75. Looks like it's voting to the upside, and we're above the zero line. So Pfizer on the move. Auto framer and the regression line fractal framework, just for your reference. Lots of candidates to choose from here. And also on the daily pinches. These are the ones that had a tight dojis on Friday, and compared to large range stats, so you get a very favorable kind of a move out of that compression in a one-day pop. And this is the reward to risk. If you were to get a range stat move and use a full daily range as your execution stop, this is the kind of multiples you might expect to see. In the market mosaic, you see basically no movement over the last 30 days, but where it should have failed, it popped up. So right at the long-term average for this degree of slope. The stretch has been still pretty close to the 200, so we're almost, we're well below average compared to the last 180 days. And the slope of the 30 has just started to hook back up, so that would be a favorable condition, a double bottom and then starting to curl back up. Very favorable. Plenty of room to go on a historical basis if this were to be a stretch. Just starting to get some upside volatility here coming out of quiet. And again, I think we're postured with the RL10 has recovered, the 30 is starting to turn, the 90 has slowly been getting better. This is a favorable move baked into the cake. The last time we were in that condition was really back in here, and it came out of this doldrums for a nice run. Not a straight line, certainly, but an upward bias right now. And that's everything I want to cover for today. I'll just flash through these. You can stop and examine if you wish. And that's everything from Tortoise Capital for this weekend. Keep your risk measured and your powder dry.